And officially, good morning and welcome to Market Watch Group Midweek Check-In. My name is Scott. Here are our disclaimers. Keep in mind, as always, educational, illustrative purposes only. No recommendations, no guidance. We are not brokers. We are not advisors. Today's agenda. We'll look at as usual, look at the opening futures, what's going on. We're halfway through the week, or we will be an hour and a half into today's market, since it's only a 3-hour market. How's our posture holding up? We'll look at mindset for open trades. We have a trade in Apple that came through an alert. It's going well. Costco, if you saw Costco, I told you I wanted to show patience with that, and what's happening now? It's moving. Financials, we've been speaking about financials. And saying that I still think it's got a good chance of moving into a leadership position. So don't give up on your financials. Steven said, Steven here? Oh, Steven's not here. He said, I didn't give up on Bank of America. Now it's finally making some money. So where does this patience with trades, when we talk about mindset for open trades, remember that our market posture score is what's informing this. We're patient because we're a 5.75. I'm not as patient when I'm a 2 or a 2.5 or a 1 or anything negative. We're only patient. We're only in this mindset of expecting another sector to join because of our market posture. I want your market posture to be providing confidence in these peripheral decisions. Our market posture should be helping us to have a number of boxes already checked in regard to what we're going to do. And that's why I think it's such an important overarching component. We'll look at our opportunity list. I'm going to change that. I've eliminated shopping list. I didn't like the connotation of I'm looking to buy something, so I'm going to change that today. Here in just a second, we'll review our opportunity list. What are the setups? And we'll just talk real quickly. How are your rules coming? Especially, I would like to see the discussions if you're new. We're working on trading rules. What does that look like? Well, when we say trading rules, we're talking about the actual rules of execution. If you look at section 3, and I'll pull it up here when we get to this point, but it's the things like, let's define a setup. What are the characteristics? I need a strong stock in a strong sector that just made a new high and is starting to pull back. That's a one-sentence description. It should be pretty clear, right? Just made a new high. So that means it can't be like, now it doesn't have to be its highest high. That's not what it has to do. It does have to be higher than the prior high, though, right? So there's small, subtle things, and that's why you might like, I'm not sure. Great, write this, uptrending stock. Let's just start with that. Start with something. What kind of stocks do you want to buy? Uptrending stocks. That's what I want. Is the herd already moving? Okay. If you're just starting with your trading plan, it's overwhelming. It's not, it can be kind of overwhelming. It's overwhelming because you're being asked to define things that you haven't learned necessarily yet. Okay. Just something. The first time you go through it, your expectations should be, number one, whatever you put, it's going to change because you're going to understand. It's going to be different. So that's the biggest part of the trading plan. Just start. Okay, let's get into it. Let's go look at these futures of ours. And, let me see. Got the wrong email up here. There we go. There's my posture. Let's revisit. Stability is what we have found ourselves in. And I like it. You guys tell me. We have a 5.5, 5.5, 5.75, 5.5, 5.5. Based on that, I would expect to have a nice, steady uptrending market. Ta-da! That's a nice, steady, uptrending market. Yeah? What else? What else indeed? Well, I've got opportunities that come. And I want you to notice, this is why we've been, this window started back here. Now, the SPY has been sitting a little bit, but still meandering forward and looking to move. And all the while, what have we seen? We've seen other stocks that have been starting to go. Why? Because the whole market's ready. The boats are going to start moving. Sound gone? Can you guys hear me? I just got, yes, you can hear me. Okay. I had one person say sound gone. And after yesterday, I had a little bit of a panic that Discord muted me again or whatever happened. Okay. Yes. Oh, Bob, good to see you. I didn't see you pop in. So, okay. We actually walked through what I said, expect an alert today. Here's the thing. It's a different kind of day today. An end of day alert is different today. End of day is 1 p.m. Eastern time. So as long as things, now let's go take a quick peek at our futures before we get too far here. Because we are going to be talking about what are we doing today, right? Now what? So let's look at the futures. Get a quick reload on these. Everyone liked to hear Powell talking about a disinflationary path. It seems we'll take a look at the future watch because maybe September's back on the table. What do you guys think? I moved into November one cut. That's kind of where I have seen myself. They're going to cut it, but only once. It's going to happen in November. No rate. Okay, so Steven says November. Is that based on reading his comments or just based on like your thoughts? Because I'll be honest, I have not specifically read more than just some headlines, news reports. Okay, fair enough. Fair enough. U.S. futures tread water after S&P 500's latest record. It's a funny thing. I told you guys, the market will climb a wall of worry. If you've heard that term, right? They're like, oh, everything's this. There's this inflation and there's this and what has the market been doing, right? What has the market been doing? You can see this back here, and some people have been with me all the way back. We were a 1, and then all of a sudden, now it's what? It's accelerated. It's accelerated, and it has held it. We had one bit of concern here where we're like, oh, we thought this might turn into one of these. And you'll notice what the difference is. That was 1 dip. This was 3. 1, recover, 2, recover, 3. That was a correction, minus 10%. Yeah? And that was a consolidation, minus 5%. That was less. We didn't, if you remember, I was like, oh, I'm a little concerned here. I'm not going to, I actually had to evaluate myself and say, were you overly cautious? Do more to the cyclical, like summer, and I think I'm going to have to say I maybe was. I maybe, not a lot, so I'm not going to be too hard on myself. I maintained bullishness. I think we all did, right? Despite what you heard in the news, you'll always, remember that negativity sells. So someone's always going to try to scare you. That's why it's very, very important. There's the opening bell to maintain your own posture. Good morning, press. Saw you pop in. Good to see you. All right, let's pop back to the Let's pop back to the daily. Okay, so we're flat. We opened flat, but look what we have. If you're thinking to yourself, should I be putting on some trades? I would say, yeah, the window is open. Whether or not you should, you got to determine if there's risk. How much do you have already? But look, we are a bullish score. We have been for a while. The market is clearly bullish. You can see that we had a selling cycle and a pause, and now it looks like the buying cycle is starting to open back up. Sometimes just trust the patterns. Right? Even if they're sometimes here, look, any one of those areas. If you put on a number of trades in those areas where you built expectations of risking 1 to make 3, you managed them well, would you have expected at least half of your trades, maybe even more, to have gone well? Would you have expected the ones that went well to hit their targets and achieve a 2-to-1 or 3-to-1? If things went wrong, would you expect that they went catastrophically wrong, stopped you out, and you lost the full one, or that you would be able to lose less? I told you guys, my losers. I lost. Tried, lost. I had a little back and forth with GE. Right? But when I lost, what was it? It wasn't bad. It wasn't like, oh, it stopped out. It was catastrophic. It was like a small loss because of conditions. Right? Look at what we have. So, okay. Hence the reason market watching is our primary consideration. This is the market. So that's what we're looking for. Okay. Moving on. Let's look at the VIX real quickly on the open. We were talking about some potential concerns with the VIX, and you'll notice that even here's the body low right there, and we've touched it twice. So there's no automatic head signal here. I have automatic head signals where it's not like, should I, shouldn't I? That's not what this is. This would be if you have a number of bullish trades on and they're going to carry them. Well, we have a half day today, no day tomorrow, Friday, 2 days off. It's a lot of time. If you were thinking to yourself, would I maybe want to consider a hedge? Just a temporary hedge. Yeah. I would say anytime the VIX is at a 12, that's pretty low. Very confident. But can things just, get bad? Sure. Can we pick up a hedge for a week? Let me show you what a week will cost you. Let me get, we're going to go to the August 9s now. We were looking at the 2s. I'm going to go to the August 9s. And we're going to go 5%. So what I'm doing is I'm going 5 weeks out in time. 5 weeks out in time. How did I know I was 5 weeks out in time? I knew that because this is the option chain. These are the days to expiration, DTE. 37 days to expiration is the approximation of 5 weeks. Okay? And I'm going to go 5% out of the money. We're at 550. I'm going to take 550 times 0.95. 522 and a half. So 522, 520. I'm going to look at the 523. 523 strike price out of the money. I'm not going to look at the 523 because the August doesn't have a 523. Let's look at the 525. Yeah, $1.50. Whew. I don't know. I'll be honest, I was expecting it around $1.30. Maybe it's because there's a little extra time, but for whatever reason, despite the fact that the volatility is low, these options, we've gotten these for that same basic combination of relativity to the money, right? 5% out of the money and amount of time. We've gotten those for $1.20. But it's still not a terrible price, right? It's not as cheap as I would have thought, but it's a quick and easy hedge that you can put on, carry through the holiday, through the weekend, come back, and if everything looks good, you shut it down. You're just like, all right, I put it on, take it off. It's like buying car insurance when you only drive your car. The rest of the time you park and you're like, nah, I don't need insurance right now. Just a thought, right? If you're not nervous, if you're not, it's addressing a risk management concern. I'm just planting the seed. All right, let's go look at what's going on. Let's finish our pre-market. So we're not pre-market now. We opened. The 520. Okay, thank you, Bob. So so we went to the 525, and that one was $1.50. If you went a little further out of the money, the 520 is only $1.16. To be honest, Bob, I probably would. I'd probably just go a little further, and then go from there. What's on the docket? ADP jobs. You can see. Did those numbers come out? That's a great call out, by the way. ADP was supposed to be 160. If anyone can quickly grab that while I keep talking, what did that number come out at? I didn't see it. I guess maybe we'll see it in Yahoo. Did it come out? Oh, there it is. Private payroll slow more than expected. What's the number? I never trust ADP as much. Private increased by 150. Oh, come on. Last time was 152. They were expecting 160. They got 150. Remember what we said. 150 is maintaining growth. Anything less than 150, and it's not. It's going to contract, right? It's like not maintaining. 200 to grow, 150 to maintain. Less than 150, that's when we start to feel some contraction in the labor market. We have not seen any single indication of that yet. Not one. Not one indication. So just we've seen the job openings shrink, and you'll notice that we were 7.9 and they were expecting 7.9, and all of a sudden what? All of a sudden there's 200,000 jobs more. Ta-da! Okay. If you find concern in the labor market, point it out to me. I'm open to it. But with the variables that we look at, no, there's nothing. Oh, look, we did get jobless claims today because tomorrow. So jobless claims were supposed to be 233. Remember, anything below 250 is just normal flow. We have non-farm payrolls on Friday morning. Oh, today, I didn't realize this. The market closes, but after the market closes, so you guys will maybe, if you show up for the Wednesday afternoon, you can watch the aftermarket and you can take a peek at the FOMC minutes, which are going to tell us, possibly what the Fed's thinking right now. Markets close tomorrow. Non-farm payrolls on Friday. Perfect. Real quick, let's take a look at the Fed and see what we think. So September. Okay, so September's back to 2-to-1. September's back to 2-to-1. I'll tell you this: if we get it in September, I am all for the Santa rally, and I know if we get it in September, there's going to be a bunch of political aftermath, right? Because the market's very likely to rally. If the Fed gives it to them, the market is very likely to rally and give us a Santa rally, which will, I mean a Santa rally that starts in the fall and goes all the rest of the year. which clearly will weigh in the election. That's one of the reasons I thought it's more likely November. But maybe. I think they want to avoid the political. God, it's such a political situation that we find ourselves in. And so I think that the Fed would prefer to stay out of it. I think that unless there is such a compelling reason, I think that the election almost forces them to not do what they maybe wanted to do, which then again makes it political, doesn't it? But I guess we'll see. Weigh in. Am I off base? What do you guys think? Is it September? Is it November? Does the Fed care about political perception? Those are the topics that Glenn will continue discussing with you today. All right, let's get to our watch list and see what's going on. Let's get this. Okay, Apple. Now here's the thing. Apple. The momentum looks fine. We've passed this area. You can see we got here before, and we're kind of at that same point. If you haven't yet, so press. I hope you're feeling better about your decision to hold on. We got to this point where we're like, yeah, we held through that. That didn't have above average volume. It was a nasty day, but we said, look, we hold on. The next day, what? We expected it to. Remember, we had a nice candle conversation, and the term I used was harami, which was an inside day. I expected it to be inside of this day here for me to continue. It did. Hoorah. It turned out to be a piercing line. A piercing line is better than a harami because a harami stays inside of the prior day, whereas this pierced through the following piercing line. And then here we go. Is it a new trade? No. We put the alert out here. This is what we're looking for, right? Okay. Now what? Now we should be thinking, okay, do I start, now that we've gotten some of this, do we start scaling out? Yeah, it's a good idea. Take a piece, a quarter of it. Tighten up your stop, etc., etc. Okay. I wanted to stop on that one because that wasn't an alert. AMD, see, yesterday I'm like, ooh, maybe. Today I'm like, I don't know. Amazon looks great if you're in it. Overextended if you're not. Waiting for a pullback. AVGO. Okay, so AVGO, we've been playing with this one. We played with it yesterday. We played with it last Thursday. Right back here on Thursday, we played with this. And we said, okay, let's kind of play with it and see what happens. And then we've been talking about it. We've been saying where we think it may go or may not go. We did something similar with Micron, right? You see, there's similarities there. And one of the things I emphasized to people yesterday, when I get excited about a trade, I'm excited because it meets all the rules. That's great. I mean, that means I have all the factors that help put probability in my favor are all in place. That doesn't mean I'm like, oh, this trade is so likely to be right. And I think sometimes that's what people hear. In fact, what I said yesterday was, this trade's somewhere between 45 and 55% likely to be right. Could be more. And if it's right, it's likely to get 2.5 times what it would lose if it's wrong. That's it. That's all we need. That's all we need. And then when we get conditions where the market's a 6 or a 7, all of a sudden we're right 60, 70% of the time. And things are just cranking and you're like, oh my gosh. And the whole time that's happening, what am I doing? I'm like, oh, but let's keep our eye out for danger. Right? Let's not get running too hot. Let's not give it back if things turn around. So there it is. So yeah, I think there's still setups. There's still viable things happening right now. So let me jump back where I was. AVGO. Look, it's looking good. It's looking good. Let's see what happens. AXP, we can see the financials have started to come back in. Boeing, oh, it didn't make it back. I didn't like it. Well, no, I said I think it was a viable trade. I didn't trade it because I just don't want to trade Boeing right now. That's just a personal preference. Bank of America, okay. Stephen was patient. Never broke support. Never broke the trend. Now here we are. Now what? Well, now we see a little bit of a potential evening star. We've got a five days with funky market times in front of us. We're starting to see a little pinch. Do we start thinking about locking in some gains, tightening some stops, and then at some point potentially closing the position? Yes, of course we think that. We're short-term traders, right? We expect trades to last 5 to 7 days, 9 days. Of course we do that. Absolutely. Absolutely. Citi. Same kind of a thing. Caterpillar. Okay, Caterpillar. Maybe we're starting to see industrials. Financials and industrials are the two that we would expect to start coming more into focus for us. Colgate-Palmolive, that right there is dying to be traded. It's writing a letter to me right now. Dear Scott, I believe I should be considered as a candidate for your trade alert program. I believe I show the qualities that your traders are looking for, and I would like to be highlighted. And I'm like, yeah, accepted. Oh, let's keep our eye on this one. It's just fantastic. Chipotle. I don't know. I feel like I'm still thinking about it just because since it split, I've been wanting to trade it. Is it holding on? Am I wanting more than it's showing signs? I don't know. Let's keep an eye on it. If it holds, you can see it's still above these old resistance levels and right around this halfway of this breakout point. And see how all these things kind of converge in this area? I'm okay with it still. I don't know, but it's got to turn. We'll see. We will see. Right, Sandy, I like your read. She says, I think it's still a bit unstable. And here's the thing. Great. Then we call it a consolidation if we think that. And what that means is that there is no trade setup here. Even though it just made a high and it's pulling back. Because when the pullback is too much, we stop calling it a pullback and we call it a consolidation. And that means that when I draw the line across the tops, once I've made that declaration, I do declare, it has to break it. Then it has to come back and give me a higher low. Once it's in consolidation, I expect to see this reversal pattern or I won't trade it. And it's just, you know, man's got to live by a code. Women too. That's my code. That's what it says. So just like that, I made the decision. Sandy said it's unstable. I trust her opinion. I agree. This has now been deemed in consolidation. Okay, that's it. We don't trade it now until this exact pattern occurs. Boom. Moving on. Moving on. Now, here's the thing about that. Once we've done that, how long will it take us to analyze Chipotle from day to day now? Seconds. We know exactly what we want it to do. We look at it. It hasn't done it yet. Move on. Oil tried to make a pop. It's up a little bit, but Costco. Come on, Costco. Come on. Yesterday, you did so good. I might have to put some classical music on and leave the chart open after the meeting today for Costco. Oh, no, wait, that's plants. Come on. What am I going to do? Diamonds. I do like to talk to my trades sometimes, I'll be honest. I like to give them encouragement. There's nothing wrong with that. You're just encouraging them. FCX. Oh, no, sorry. That's EQH. EQH. I still believe in financials. It's a little pause. If you think it's happening, you can look. The stochastics is turning. We're bouncing. Today is a pause, but Heiken Ashi is actually okay. So if you're looking for an entry, it's valid. You don't have to give it much room for a stop. I think I could put a stop on this thing 70, 80 cents away. Then if I'm right, can I catch a couple bucks? This thing gets up to 43 in line with its trend. There you go. I'm thinking about it. I'm thinking about a financial still for a new trade. FCX. Ooh, a little bit of money coming into whether that's copper or gold, some kind of material. We'll see here. It looks like it maybe is gold. GBTC, nothing there. GE, I don't know. It's now or never. Gold. Gold is up 1%. Google still thinking about it. HIMS. There's that same kind of a setup. Right? We have a number that did this, like they got running hot, and then they pulled back. They hit their 50. Micron looked like this. AVGO looks like this. CMG a little bit. HIMS. Yeah. Maybe one or two you take, one or two you don't. This one started to bounce, and now it's stalling. So here's something. If you didn't take it, and this thing goes like this, and then turns, you guys know I love the hiccup. A few people get shook out, and then all of a sudden, bing, it goes. And so if you're in, don't get shook out by the hiccup. If you're waiting and you see it, that might give you that second chance might be what you're looking for. There's times where I'm thinking about a trade and I don't take it, and then the hiccup comes, and I'm like, oh, you know what? I'm gonna go ahead and jump on. And there's times where I take the trade and I don't want the hiccup to shake me out. IWM. Small caps still feel pretty iffy right now. They're not convinced. Home builders got smashed and are down. I'm not feeling that at all. Coca-Cola. Remember what I said? Coca-Cola. I liked this. This was a great trade. I took this trade when we found Coke. And then it got to the old high. But I still have this going on. So I believe we are looking at an ascending triangle, and I have a chance to maybe catch a trade here, looking for the breakout of the triangle in that situation. That's what I'm hoping for. So, yeah, you'll notice Coca-Cola and Colgate-Palmolive, they showed up on our watch list together because they're from the same group. And I would still be willing to trade them both. Meta looks viable. Looks like it's wanting to give us a signal coming out of this. I've liked Google better, but I like them both. MFC still riding a little high. MMM, okay. MMM, its trend has kind of gotten into a bit of a grind. I prefer swings, up, down versus grinds. Grind. Morgan Stanley. Okay, so we are our hypothesis on the financial sector is bearing out, I believe. Which two things: A, it helps us if we're in them, and B, it's the more we see financials, the more likely our sector rotation score is to get another point. Not a point, another tick up, another quarter of a point, a notch. Microsoft. It's just strong, but there's not really good entries. Micron, I think Micron's viable. We looked at that last night. If you want to see it, go watch the recording. That will help you build a trade on this. I maybe will just put it out as an alert too. In fact, I'm going to. Sometime this morning, I'm going to put this out with the parameters that we went through So if you want to go look at the inside, you know, of how would an alert start to come to be? We have a target here. We have a target here. We have a stop loss here. We have an entry here. And we talk about how would we position size that. Our ultimate reward to risk is better than 3 to 1. We're getting almost 2 to 1 at the pressure release. I was looking to go watch the video. Super, super good video. If you were there, it was frustrating because we had some audio problems. If you weren't there, it's a perfectly clean video, and those of you who were there can watch the repeat. So yeah, I mean, these are open for business trades. It's just a matter of, does it fit in your risk parameters? Do you have room for a technology trade, room for a financial trade, because you don't want to have only financials if that's what you already have, or only technology if that's what you already have. Netflix, kind of stable. Nvidia, stable. Palantir, I closed the rest of it yesterday. Now I'm waiting for the next pullback. That's one that I've liked. QQQ, everything's looking good in technology. RTX, I'm about to get RTX off the list. In fact, I'm going to. I never really loved it that much to begin with. Here's the SPY. SPY's holding up, looking good. Here's TSM, starting to continue up again. The dollar. We expressed concern about 2 things to start this week. We expressed concern about the VIX. The VIX has stayed under control. No concern realized. We expressed concern about the dollar. The dollar has eased back. No concern realized. I would like the dollar to continue. I'd like it to drop back below here, and then even more than that, drop back below here. This is ideal. This is iffy. That's kind of how I see it right now in a real quick fashion. The VIX is under 12. Magnificent. Just magnificent. Walmart. Walmart's still setting up. So if you didn't get a piece of Costco, or if you got a piece of Costco and you're getting ready to start, well, Costco didn't move yet. This one's setting up. I'm thinking about this one too. We just remember what we talked about for a setup: a new high, pull back. That's the setup. Now what am I looking for? Now I'm looking for a trigger. What's a trigger? Price action, maybe with a confirmation from an oscillator. Now I have a trigger. Then what do I need? I have an entry. I need a target. I need a pressure area. I need a stop loss. That might be a little lucrative there, but right, I need to start building how this trade is going to turn into a trade. And if you want to watch how that exact process occurs, go to the Market Watch announcements where I posted last night's video. Click the link, watch the video, and learn away. Okay. That's it for the watch list. Let's take a quick peek at our trading plan. We are working on section 3. Right? Markets, what? I want market leading, uptrending, high liquidity stocks from strong sectors. Is Micron a market leading, high liquidity stock from a leading sector? Yes, yes, and yes. All the boxes are checked. Okay. What time frame am I using to make decisions? I'm using dailies. Sometimes I go down to 4 hours, 2 hours to get some intraday perspective. Sometimes I go to weekly to get other perspectives. Those are the different time. So see what I'm getting at with my rules? I might have 3 different charts that I use. Well, then define, what does each chart do? We can't have ambiguity. You can't look at 5 different charts and then wonder which chart you'll use to make a decision today. That's too hard. I'm going to look at the daily chart for the primary considerations, and I might look at an hour or 2 hour in order to get granular observations where I can find a price point a little more clearly. So whatever chart you use, you need to very specifically define what role they play. Position sizing. We went off of a $250 risk yesterday. That's what we built our trade from when we did Micron. And I show it both as a stock and as an option. How would I turn that stock into an option? And how do they correlate? How would they behave would they behave the same way? The answer was yes. And that's intentional. So the position sizing, we knew exactly how many shares. 40 shares was a stock trade. 40 shares or one contract if it was an option trade. Or if we wanted to have an ability to scale the trade, we would have gone further out of the money to buy 2 contracts. Those are the considerations we went through to determine position sizing. We had a very specific entry. We had a very specific stop loss. We had multiple exits that we defined. We had a take profit level where we only were going to take a small amount. How much to buy or sell? Those were the tactics that we employed. We talked about when we're going to start tightening our stop loss and whether we're going to use a trail stop or whether we're going to manually trail the trade with a stop loss that I cancel and replace. Those are the trade management techniques that I'm using. So every single one of these rules we discussed and went through in yesterday's class. That's what we're looking to do in these foundations classes, Tuesdays, Thursdays. I asked the beginners, I said, is this right? Is this what you need? And they said yes. So for now, that's what we're going to keep doing until we get information otherwise. A couple of other things that I want to flag real quickly. Boom. This is actually maybe even a surprise for other people, but I added a channel here called Beginner's Corner. I put it up at the top. What's in there right now? Nothing. It's empty. But what's going on in there? There's going to be curated paths of videos like the one we had yesterday that just allow you to see it, to participate in it. And when you're new and you're saying, hey, that's great, but it would be great if I could, whatever that's you're about to say, you're going to go here to the suggestion box and you're going to say, Scott, you really need to do this because I'm listening. I want to know what you're saying to me. And so hopefully you're seeing the community come together here with the suggestion box. Here's your chat. You want to have a trading discussion about your trading plan? Come here. General Market Watch chat, come here. If you need to get something, your resources, your downloads, those are here. You want to ask a question? There's been some great activity in the Ask a Question. Kevin's not here today. He's been fantastic. Don's in there. We have some we're starting to get really good conversations. The other coaches are looking to get in there and answer your questions and start it. So hopefully you're finding that even if we're not having a meeting, it makes sense for you to pop in here and just kind of spend a little time. I know Steven is in there as well. Ooh, a vocab. Ooh, that's not bad. It could get long. Let me think about that, Sandy. Let's go back and forth on that a little bit because maybe we do want like a Market Watch specific, right? And remember, you guys know I love ChatGPT. If you haven't, you should even just get a free account because if you ever just had literally whatever trading question, if you went in there and you asked it, it's going to give you good information. It's going to help accelerate your learning, right? Remember that all ChatGPT is doing is it's basically the next Google. It's searching, finding, compiling, and then presenting it to you in a conversational way. Some people fear it. You shouldn't. You should use it as a tool because when you use it as a tool, it's remarkable. So I would absolutely counsel that. The Market Watch announcements is where I blast it from, but I'm wondering if I should just have links. You guys tell me. If you're ever wondering what's going on, in here you'll find all the old alerts. You'll find any video that gets posted. this is just the best place. Is come to the announcements and you can see here's the link for the foundations and you can click it there. But I am wondering, Press, if it makes sense to have, like, maybe we have just like, and I hope you guys have gone to our YouTube channel, because all I'm doing is I'm uploading the videos. And so if you're a member of if you go to the YouTube and you subscribe, that'll actually flag you too, just as a side note. But everything's available there. Everything's available here. You guys tell me, where's a good place to make sure that you're always finding the most recent recording as quickly as possible. Okay. Let me go back to my chat here. I lost everybody. Where are you? There we go. Announcements is a little ambiguous. Okay. I'm going to definitely do announcements because that's where I post it to pop it. No, Press. Announcements is ambiguous and has other things. I'm wondering if there should just be, you know, recording links. Just like, hey, all we do is if there's a video, we post it there, and that's the only thing that's posted there. Be water, Press. Let me think about that. One thing that we don't want is we don't want too many channels, and so we are mindful of that. But that is one where it's like, look, we're giving the recordings constantly, so is it easy to have them there? Yeah, 105. That's too hot. All right, listen. Remember, it's a busy day today, even though the market's closing early. Both Glenn and I completely forgot, but we scheduled. He put it in his calendar, so he's going to be here from 3 to 4 in the Market Watch Meetups channel. If nobody's there, he's gonna go answer some questions. He's gonna go answer some questions, start some conversations. But hopefully, at least a few of you show up and get a nice discussion going. Both of us will be here tonight for foundations, and there are trades around. Look! Even though the market's closing and will be closed, let's be ready for Friday because there are trades in setup. All right, I got to run. I'm a little over. It's great to see you all. Thank you very much. No audio issues today, so that's fantastic. I feel like we've had some great progress, but I do want to hear from those of you who are new. Are we on the right track? Are we giving you what you need? Let me know. I hope you're starting to take some trades, starting to paper trade, if nothing else. Yes, happy Independence Day. Happy 4th. See everybody soon. As always, happy trading.